This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping on Thursday, May the 2nd, 2019 at 7:05 a.m. The numbers this morning: U.S. dollar at 97.63, Canadian dollar 74.33, the pound at 130, the euro at 112, gold at 12.72, silver at 14.71. The gold to silver ratio yesterday, Wednesday, was 87. Today it's 86.5. Platinum 861. Palladium 1332. WTI 62.62. Brent 71.26. Nat gas 260. Bitcoin in U.S. dollars 5,369.99. Bitcoin in Canadian 72.20.81. The Dow at 26,430. S&P 29.23. Nasdaq 8,049. TSX 16,502. Big story of the week. Harold, give us a rundown on palladium. It was all over the place.
You bet it was. In fact, in one day this week, I believe it was Tuesday, the market was down $100 in one day in palladium. So, again, we knew once it got up to that ridiculously high price that the only way it was going to stay up there is if there was no supply whatsoever. And again, in the past, we've seen what Russia has done with the metals markets, mostly in platinum and palladium, because they certainly control a large amount of it. So palladium has come crashing down, $100 down in one day. It was down again on Wednesday. Should be slightly down today on Thursday as we're taping the show. So again, I don't see it going much above the high that we saw, but platinum came up from 800 to 910 as trading right now at about 870. So again, at this point, for those that did end up going out and buying a little bit of platinum, they ended up picking up about $100 an ounce, which was a nice return. But again, at this point here, I think that they're going to basically remain a bit volatile. And in those type of volatile markets, I really don't like to trade them. So again, we'll have to see what happens. But I think that the market's going to really start to trade within a range in palladium. And unless Russia cuts off supply, that's the only way I see the prices going higher.
Connect with Harold at rarecoloreddiamonds.com. Rarecoloreddiamonds.com. Get the companion to the podcast, our free weekly newsletter. The Federal Reserve yesterday held rates, no surprise, citing a lack of inflation pressure. The central bank held its benchmark rate in a target between 2.25 to 2.5. U.S. President Trump intensified pressure on the Federal Reserve, calling for a 1-point rate cut and more quantitative easing. The president compared the Fed unfavorably to China's central bank. They are stimulating the economy, and says more stimulus would see the U.S. economy go up like a rocket ship. I don't see the Fed cutting interest rates by 1 point and going back to quantitative easing. It's not going to happen.
No, that's not happening. That would be ridiculous. The fact is that there should probably not be a rate hike at this particular point because the economy is slightly stronger. But again, a rate hike at this particular point with very, very little inflation doesn't make an awful lot of sense. So I don't see that really happening at this time. Yes, Trump is going to pull out all the stops to try to get reelected. The numbers are crazy when you start to look at, both sides of the fence and what people are saying. Some people are saying that, 55% of the U.S. Citizens don't want Trump in. So, but they don't all vote. And when it boils down to it, let's face it, everybody felt that Hillary was going to win, and she didn't. So anything is possible in politics, and we'll certainly have to see what happens next year.
Speak with Harold about investing in hard assets. His website, rarecoloreddiamonds.com. The Bank of Canada Governor, Stephen Poloz, says he believes policy interest rates would likely need to rise if the slew of factors slowing the expansion vanish. Speaking to lawmakers at a Senate committee hearing, he said accommodative rates are needed needed to sustain the recovery right now because of headwinds, trade tensions, hampering investments. At the same time, a policy rate of 1.75% means that in real terms, after accounting for inflation of about 2%, borrowing costs are actually negative, he said. So the Bank of Canada, Harold, similar to the Fed, not going to be raising rates anytime soon, especially the new NAFTA has not been signed. And Canada has said to the United States, as long as you have some of your tariffs in place, we will not be signing it, and it has to be approved by the House. And there are some Democrats that are not very happy with the new NAFTA put together by Donald Trump. So, Harold, in Canada, we're somewhat hostage to what's going on in the United States.
Very, very true. It would be a big mistake for Canada to raise interest rates. So they have a dilemma. They raise interest rates. There's so much debt that it's going to make the debt more expensive to carry. And for credit card debt and for the everyday citizens in Canada, and let's face it, most are struggling at this time, an interest rate hike would be disastrous. So, I would hope that that's not going to happen. But on the other hand, there's projections that the Canadian dollar can plummet. Could drop down to 71 or 72, and then drop all the way down to 61 or 62. So an interest rate hike would strengthen the U.S. dollar, but I don't know if that's in the best interest of Canada to have a very strong dollar at this point because of exports. So we'll have to see what they're going to do. Again, I truly believe that if you raise interest rates at this particular point in Canada or the United States, it's going to have a very negative effect.
Canada's economy shrank. They blamed it on the weather in February. The gross domestic product fell 0.1%. So Canada, we are not growing. In the United States, the GDP was 3.2%. That was the first quarter domestic product. Now, one item that we've talked about in the past, and it still has not been decided, is the debt ceiling in the United States. You have the deficits, which are running about $1.5 billion a year now. You have the debt, which is at over $22 trillion. Then there's the debt ceiling that would have to be raised for them to borrow more money. The United States government will have to stop borrowing money between July and December if Washington doesn't agree to raise the legal restriction on the public debt. Now, the last time they negotiated, they were able to get a deal, but that was back prior to the Democrats controlling the House. Concerns on both sides of the aisle, Republican and Democrat, about raising the debt ceiling. We hear this all the time, Harold, but the truth is they have to raise the debt ceiling. They will go into debt further because if they don't, they've got a serious problem on their hands.
It's ridiculous. It's a never-ending cycle, and it happens all the time, and they fight about it, but again, if you don't raise it, the country's out of business, and then there's some serious repercussions. So I don't know where it's ever going to end. I mean, how high is the number going to get? $22 trillion is an impossible number to pay back. I just don't see how in the world, even if the economy is improving and people are making more money and they're paying, their taxes and things like that, I just don't see any way that number is going to get lower. $22 trillion debt is out of control, and I'm pretty sure that the number is higher than that. So, don't forget, back in 2008, when the mortgage crisis hit and the quantitative easing, was in full steam, they bailed out so many companies. They spent so much money. They borrowed and printed so much money that I just don't see any way that the U.S. is going to get out of that. So all they're doing, as they say, is kicking the can down the road. But things are not getting better in that sense. And again, I just don't see it. That's the major reason why they don't want to raise interest rates, is because a $22 trillion debt, which a lot of that debt is owned by China. And we're fighting with China. Excuse me. So the situation, I believe, is dire. You're fighting with the country that owns most of your debt, and you're not accomplishing anything, and you're hurting some of the major corporations in the U.S. that deal with China. So the tariffs are going to be crippling. It's going to put a lot of companies out of business. And there's other situations in the U.S. that are suspect. You certainly have a major problem in retail. There's no doubt that the brick and mortar stores and the big, chain stores are all going out of business. In fact, they announced this week that Burger King is going to be going bankrupt. So you're talking that, there's some good things happening in the U.S. I think a lot of it is smoke and mirrors. Again, you've got a $22 trillion debt that can never get paid back, and it's growing and growing every single year. I just don't see that that's a recipe for things getting better. In actual fact, there's a lot of people in the United States that are barely getting by. The middle class is not doing anywhere near as well as they should. And again, the stock market, even though it's at 26 and change, it's priced so high that the middle class, cannot even get into that market. So it's a totally different world. And if you don't understand the debt market and that, you're going to find that there's very, very few investments that you could make at this particular point that really make any sense. Stock market is not for everybody. It's so volatile and risky. Again, with tremendous debt and other situations within the market, that could really hurt that market substantially. So the small investor should not be in that market. The majority of people that trade stocks end up losing their money. If you look at the commodity markets, either they're trading in ranges right now like gold and silver are, or you get the extreme volatility that palladium was showing. Now, again, for most investors, these are not suitable markets. If you don't know how to trade commodities, you should not be trading them because they're heavily leveraged and the majority of people that trade them lose. So that's not something that we ever recommend. If you are going to buy a commodity like gold or silver or platinum or that type of thing, buy it physically, put it away for the long term and own it outright. You don't want to leverage anything at this particular point because if the market goes against you, then you have what is called a margin call and you've only got a few hours in which to come up with enough money or you lose your entire position. That's a very stressful way of investing, and it's just out and out gambling. And again, the majority of people that are trading stocks right now are not doing well because to pick individual stocks at this time is extremely difficult to do. Who would have ever thought that stocks like Amazon and Google and Apple and stocks like companies like that would have plummeted so badly at the end of 2018? So again, just not a place that I'm comfortable recommending for clients to put their money, and not comfortable, myself investing in those markets. So at this time, as disappointing as it is because we all want an opportunity to invest money to make money, there's very little opportunity at this point where the volatility and the risk is not too heavy, for us to get into. So I'm a firm believer that you never rush to the markets. You let the markets come to you. And again, even though I do believe that longer term gold is going to be a phenomenal investment, right now it's trading in a range and it's all based on what the U.S. dollar is doing. If the U.S. dollar gets stronger and stronger, gold's going to get weaker and weaker. And that's the natural trading of gold and the U.S. dollar. They're intertwined in that way. When the U.S. dollar is strong, gold is weak and vice versa. When we first started recommending gold back in 2000, the price of gold was at $250, and that was primarily because the price of the U.S. dollar was at 108 or 109. So when the U.S. dollar was that strong, about 10 cents higher than it is right now, there was no reason to buy gold. Gold was down at $250. But then things started to change, and we started noticing changes in the market. 9/11 happened. The sheer cost of printing the money to get out of those problems was going to either be inflationary or is going to bring down the price of the U.S. dollar. And that's exactly what happened. And we caught an 11-year bull market in gold that started at $250 and went all the way to $1,900. Now we're trading 8 years later in a range. The market has basically, traded between 1,050, which was the low, and 1,350 or 1,370 was the high. Oddly enough, the price that we need to see in gold to confirm a new bull market is $1,380. Every time we get close to that price, the price tends to back off. Now, is it ironic that that is happening, or is it a manipulation that is making that happen? We know that the metals markets have been manipulated for a long, long time. And that's one of the things that bothers me most about trading in the futures market is that you could be dead right in your assumption of the market and your analysis, but because it doesn't suit, the U.S. economy at that particular point, then gold could be not a viable trade like they did in 2011. The price of gold hit $1,920, was going to $2,000 and higher, when all of a sudden the exchanges raised the margin requirements on gold so substantially that it dropped the price from $1,920 all the way down to $1,050. There was nothing in the marketplace at that point that warranted gold dropping almost 50%. It was just the fact that gold, when it's strong like that, signals that there's a problem with the U.S. and world economy, and was not comfortable for the U.S. government. So what they did is they worked with the exchanges in Chicago and New York where gold is traded, and they brought the price of gold down. And the way that they did it was by raising the margin requirements. That means that in the futures market, one contract of gold is 100 ounces. And if the price of gold is $1,300 an ounce, so you're basically controlling $130,000 worth of gold by putting up about $4,000 or $5,000. That's your margin requirement. Now, if the price goes higher, every dollar that gold goes up, you pick up $100. If it goes up $10, you pick up $1,000. If it goes up $100, you pick up $10,000. So that's how leverage can work for you. But leverage can work against you also. So if the market was to drop $100, you're going to lose $10,000, even though you only put up $4,000 or $5,000 worth of margin. So you could lose much more money than you put in if you leverage your positions. And that's exactly what happened in 2011 when the exchanges raised the margin requirements and gold plummeted from $1,920 down to $1,050. And I'm sure it caught a lot of traders, off guard that this had happened. They raised margin requirements every day for 5 days in a row, made it so expensive to trade gold and silver at that time, and the markets came crashing down. Is that an illegal move? You better believe it is. It is something that was so illegal that I'm shocked that there was not massive class action lawsuits against the exchanges. However, they can do whatever they want. They can raise margin requirements if they feel that it's going to affect the market in a negative way. So I'm sure it would have been a difficult fight, but the fact is a lot of investors lost a tremendous amount of money in 2011 when the market should have continued to go higher. So that's what I don't like about these markets, and why I never recommend leveraging positions. I only recommend owning it outright. Now, again, for those that like the action, that can take the risk, you could do whatever your heart desires. It's just not something that we ever recommend, because 90% of people that trade leveraged stocks or leveraged commodities lose their money, and that's not something that we would ever recommend.
Harold's website is rarecoloreddiamonds.com. Connect with Harold, learn about investing in hard assets. We believe with the Argyle mine, which produces 90 to 95% of the world's pinks, shutting down in 2020 in about a year or so, there's a great opportunity to make an investment and hold an asset that will do well over time due to scarcity. There was a 34-carat yellow diamond that sold for $520,000 in February. It was a yellow diamond ring that belonged to the royal family of Hawaii. The old mine cut 34.28 carat fancy light yellow VS2 clarity diamond ring set in platinum and white gold was the lead item at Clark's auction gallery sale in Oakland, California. It realized $15,155 per carat according to Rappaport. It originally belonged to Hawaiian King Kalakaua for his wife, Queen Kapolani, to wear to Queen Victoria's Jubilee celebrations in England in 1887. Now, in late 1890, the king traveled to San Francisco, where he used the ring as collateral for gambling for Crocker Bank. Now, he passed away during the trip, having never returned for the ring. Crocker Bank sold it to a Texas gem dealer at the turn of the century. In 1950, Frank Spengler, owner of the famous Spengler's Fresh Fish Grotto in California, purchased the ring, which he displayed in a special case at the restaurant's Diamond Bar until October 2018, when it closed after 128 years in business. The yellow diamond was sold as part of the Spengler Collection auction, along with other items including fine art, furniture, and historical pieces. Harold, we always love a good backstory, but here is a ring that once belonged to the King and Queen of Hawaii, selling for $520,000. It had a high estimate of $600,000. But when it comes to the provenance, as they say in the TV commercials, priceless.
You better believe it. Again, a good price realized, but understand that that diamond is very old and an old miner's cut. I wonder if they ever considered recutting that diamond, because a diamond of that size, could have sold for a lot more money than that. But again, I love it too. I love the history of it. I love the provenance of it. And again, I would have loved to have seen that ring in person.
A giant 1,758 carat diamond, the second biggest ever discovered, has been found in Botswana. But unlike its rivals, it won't fetch a record-breaking price. Lucara Diamond Corp said it unearthed the stone roughly the size of a tennis ball at its Karaway project in Botswana, a mine renowned for its huge gems. Now in 2015, they found the 1,109 carat Lesedi Lorona, which at the time was the second largest ever, and eventually sold for $53 million to Graf. And Graf recently made a big stone out of it and had other smaller stones made as well. But Harold, you can see sometimes as they find these bigger stones due to changing technology and luck, it doesn't necessarily mean it's always going to be a big payday. Sometimes you just end up with a very big diamond.
But again, a very big diamond is a good thing to own and is still very valuable. So I just love the fact that they're able to find this. And again, you're right. With the new technology, I think that the future looks very, very bright for finding diamonds like that. There's a show on the History Channel called Expedition, I think it's called. And the way that they search for treasure, today with all the new equipment with, metal detectors and things like that, it's just amazing what they're able to find. So I find it very, very exciting. And I think that it's only going to get better as technology gets stronger, that we're going to be able to find some amazing pieces in the future. It's very, very exciting.
This is not a diamond, but worth mentioning. 17-carat sapphire smashes estimate at Bonhams in England. It's not often that a jewel sells for almost double its pre-auction estimate, but that happened this week with a rare cashmere sapphire at Bonhams. The 17.43-carat stone fetched, this is in US dollars now, $944,713, or close to $54,000 per carat, beating its high valuation of $521,440. The cushion-shaped vivid blue stone dates to the late 19th or early 20th century and was formerly owned by a European noble family. It was the headliner for Bonham's London sale on Tuesday. It was its first appearance at auction. But Harold, it's not just diamonds, rare-colored diamonds. We see it with the art market, cars, handbags, heck, even running shoes. They're going for crazy prices at times, but it's nice to see a beautiful sapphire sell for a record price.
That is an unbelievable price. Very, very high. In fact, it was higher than that big Hawaiian diamond price-wise. So, and I'll tell you what else is selling is bottles of wine and whiskey. So people love hard assets. The fact is that in a balanced portfolio, especially for the wealthy, they're in stocks and bonds and real estate and all that. But I think that most people that own collectibles enjoy that the most because it's tangible. You can hold it in your hand. You can display it in your home or office. You could wear it on your hand or around your neck. So, that's a beautiful thing about owning a diamond or driving a rare Ferrari or, having a Picasso on the wall is pride of ownership and the fact of owning something so special that, when people see it, that they're, awed by it. And that's what's phenomenal about the collectible market. So I'm just very excited to be in that business. We've offered and shown some of the world's most beautiful diamonds over the last 15 years. We've held auctions and raised monies for charities, and we did the Susan G. Komen pink ribbon for breast cancer charity. We did that all in pink diamonds for them and raised $100,000. So, I love that aspect of the business is that, you have pride of ownership. You have something that is so beautiful that when people see it, they're awed by its beauty. And that's why the hard asset market is so substantial at this time, and why prices reached at auction are hitting record prices in a lot of cases.
Couple of final notes as we end off the podcast. Harold touched on it. Only one bottle of $85,000 whiskey exists on planet Earth. Rare whiskeys can fetch more than $1 million at auction, as we've mentioned in past. But for this whiskey, only one bottle exists on Earth. A high-end Scotch whiskey maker, the Delmore, and Massimo Bottura, the executive chef of Modena, Italy's 3 Michelin-starred restaurant, ranked number 1 in the world by the world's 50 best restaurants, partnered to produce the Delmore L'Anima, aged 49 years. Now, this single malt whiskey is being auctioned at Sotheby's, with bids being accepted through May the 9th. Is expected to sell for at least $85,000 based on the previous Delmore auctions. Don't drink the profits, whatever you do. The Canadian $10 bill featuring Nova Scotia civil rights pioneer Viola Desmond has been named the best in the world. The International Banknote Society has announced the Desmond bill won the coveted Banknote of the Year for 2018. We get them all the time. They are very beautiful. The problem is when they designed them, all the vending machines don't take this bill. So now they're having to go change all the vending machines that will take this $10 bill. A great tribute, but it's turned out to be a little bit clunky. I mentioned this to Harold. We had talked about Vladimir Guerrero Jr. with the Toronto Blue Jays, and he played his first game last Friday. You would have thought he was a rock star because the fans of Toronto went nuts for him. He went to a Raptors game. He was being hugged, autographs, pictures. He's going to be the future of the Toronto Blue Jays. Now, the Topps Trading Company announced Monday that Guerrero's first rookie card, made available the day after his Friday debut, has broken a record for any card released through the company's Topps Now program by selling 19,396 copies within 1 day of sales. The mark broke the previous one-day record of 17,323 set by Angels two-way phenom Ohtani. But Harold, the future is exciting with Vladimir Guerrero in the lineup in Toronto.
You better believe it. His father was a great player. Well, we're hoping that the Blue Jays do very well this year. They're about 500 right now, or slightly below. Very disappointed, obviously, in the Leafs in the way they, finished in the playoffs. They've never gotten to the second round in the last 15 years. And it's all tied up with the Raptors. So big Raptors game tonight. Let's hope they do well. Always pushing for Canadian teams.
Closing, we should pay tribute and remember you're part of Jewish community, Jewish faith. A shooting at a California synagogue killed 1 and injured 3 people on Saturday. It was in San Diego, and they did eventually catch the person that did it. But here we go again. More shootings, and another time that those of the Jewish faith have been hit. And it doesn't matter what faith you are. It's just wrong, wrong, wrong. And it's once again very sad to see.
It certainly is. The whole Jewish community is up in arms about it and scared. And let's face it, you're right. It doesn't matter what religion you are. If you go to your house of worship, that's where you should be comfortable and safe. Just like the kids in school. It's just not the case anymore. There's so much hate in this world that you have to think twice about almost anything that you do, where you send your children, it's a frightening situation, and obviously our hearts go out to, the whole Jewish community. But, it's not only the Jews that are in these situations. There's hate crimes all over the world. It's just terrible that this is what the world is like at this time. It's very frightening, especially to raise children in this day and age, with this going on, because they have lots of questions about that. I know, my 5-year-old, he's almost 5, my grandson is questioning that. So it's very concerning, and it's an unfortunate thing that there's so much hate in this world.
Very true. Any closing thoughts, Harold?
Again, the markets can get very volatile. I know when you see a market moving up and the news on it is bullish, like palladium was, you've got a desire to get in because everybody wants to try to get in and make some money. But when a market gets that high so quickly, it becomes a very, very dangerous trade. So again, if you are going to trade these markets, stay away from leverage. Buy everything physically. This way, if the market, short term goes against you, you're not, taken out of the market. You can stay in with your position or with your trade, for a much longer period of time. So best advice right now is don't chase after the markets and don't put yourself in a position where leverage can make you lose more than what you actually put in.
Harold, thank you for your knowledge and another great podcast.
My pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com. Ask him about investing in hard assets. Get our free weekly newsletter, the companion to the podcast. That's it. Another edition of the World Financial Report podcast. For Harold Siegel, my name is Randy Marshall. We will talk to you next week.